Hello, everyone. Welcome to this webinar today, Financial Forecasting, Vital for SMEs. I'm Peter Towers, Managing Director of ESS BIZTOOls, and I'd like to introduce you to Paul Barnaby from Beyond Accounting Technologies and PlanGuru. How are you today, Paul?
I am fantastic, Peter, but I'm sure there's something I can do to improve.
That's very good. Okay, well, Paul will be making some detailed comments on preparation of budgets, cash flow forecasts, and projected balance sheets in a little while. So I'm just going to go back and just do the introductions. Thanks, Paul. Paul's the integration consultant, Asia Pacific for PlanGuru. But as well as that, as I said before, he's the Managing Director of Beyond Accounting Technologies and is a fellow of the Institute of Chartered Accountants. I think it's appropriate that we look today at the start of a new era because, Paul, I think that's what we're in, a new era for the accounting firms.
Oh, absolutely. It's post-COVID, but it's also at a time when technology is having a huge influence, not just on the accounting profession, but on the whole world.
That's right.
And how many people went to a Zoom meeting 5 years ago?
None. Maybe only in San Francisco or
Yeah.
Silicon Valley. 40 years ago, the Financial Management Research Centre, FMRC, was established at the University of New England. I was a big fan of the FMRC. It was a great activity, which was really a combination of academia, the accounting profession, and what SMEs needed, because they were all researched by the founder of the FMRC, as he was then, Dr. Jeff Meredith, now Professor Jeff Meredith, in retirement at the Southern Cross University in the Lismore area. The purpose of the FMRC was to encourage accountants to provide a broader range of commercial services. This is 40 years ago, a broader range of commercial services. Andrew Geddes, the well-known Australian accounting, I call him a guru, and I think he is, and for 10 years was chair of Green Cross Limited, was one of the joint founders of the FMRC, and that's giving away ages, isn't it? But he and I have a laugh when we think about now that 40 years ago, it was identified that SMEs needed more assistance. And here we are today, still talking about it. It's not fully implemented. There's still tremendous opportunities for accountants to introduce these services. So that's why I'm saying, I think this is the start of a new era. Today, we have the software to produce predictive reports, to do budgets, cash flows, and projected balance sheets. And Paul's going to talk about that in some depth shortly. And we can now use other software packages to produce accurate monthly accounts. We also have the communications technology. We're using one of the main ones now, aren't we? This concept of having a Zoom meeting. Zoom wasn't even in the vocabulary a couple of years ago, I don't think, but it is now, isn't it? So that accountants can literally have clients anywhere in Australia or indeed the world. So the challenges now is for accountants to deliver services that SMEs are looking for. The current debate about talent attraction and retention for accountants, but it also applies to a lot of other businesses, has highlighted the benefits for accountancy firms, I think, to provide more interesting and challenging work, because some accountants are saying to me, we can get staff. We got people wanting to come and join us. In fact, in yesterday's discussion, Amanda Gascoigne referred to attraction bonuses or words to that effect that she says some firms are paying. But some firms are able to attract staff. Why? I suspect they've got a very interesting range of clients that they're providing the types of services that we're talking about, because some firms are already well established on this. I know some firms that are got a 50-50 split between compliance and business advisory. I have a client in Melbourne who has indicated they want to go to 100% business advisory. Some people are doing it. So welcome to the new era of accounting in Australia. I think to offer a broader range of services, you have to have a detailed knowledge of the client's business activities. I call it understand the business of the business review. And a couple of months ago, Paul and I were part of a very unique webinar that featured the managing director of PlanGuru in the United States, Christian Wheelidge, and an American accountant, Adam Hale, the principal or one of the principals of Summit CPA. Adam Hale is the American accountant who is credited with the initiative to really pioneer the development of the concept of virtual CFO services for SME clients in the United States. And he made a comment, he made many, but the one that really stuck to me was, you need to understand your clients 1 inch wide and a mile deep. 1 inch wide and a mile deep. And that really emphasizes the terminology that I've been using for years. You need to understand the business of the business. Now, that is deeper than what most of you currently know about your clients for the preparation of annual accounts and tax returns. And I'm not being critical in making that comment. You know enough about your clients now to do their annual accounts and tax returns. But if you're really going to be involved in the process that Paul's about to explain to you, please go out to the client's factory or farm or office or workshop or display center or whatever they've got and understand how their business operates. And if they've got activities in other areas, I think you need to have a look at them, or at least get a video of how they operate, because you will find that there are some weaknesses in their internal control system, I think, because I found them in various clients. And you will have an understanding of whether they're properly using their key performance indicators. You might find that the people who the KPIs sheets are being prepared for, and they mightn't be called that, don't understand them. And in fact, you probably shouldn't call them key performance indicators. That's accounting jargon. I found out many years ago as a young chief financial officer in a publicly listed company, when I walked into the foreman's smoko room and asked them what they thought of a report, which was the KPIs. And one guy stood up and said, "I'll show you," screwed it up and threw it into the waste paper basket. Welcome to your new job, young CFO. It was a bit of an eye opener, I can tell you. And I said, "Why'd you do that?" He said, "I don't know what it means." And I won't repeat on air, Paul, what he said to me that day. And I looked around the room. There were 20 foremen there, some ladies and the foreman. We were in a big meatworks, and they just nodded. I thought, this is great. So I went back I said, "Can I come back and talk to you at lunchtime?" They said, "Yeah." So I got a whiteboard and we went back at lunchtime, and we went through that KPI sheet and we revamped it. We put the names in that they understood. They understood certain terms. They didn't understand what an accountant had put into it. So it's just part of my observation. When you're doing this, don't make it full of accounting jargon. Talk to the people who have got to use these documents and make sure they understand. Because someone in the office was going at that meatworks was doing a great job preparing this information every day, getting it into the foreman's room by, I think that was about 8:30 a.m. Smoko, so that they had it there at Smoko to look at it. And it was basically yesterday's final figures, and they weren't reading it. It was a bit of a disaster. I never ever told the CEO that story because I think he would have gone off the rocker, but we fixed it up. We fixed it up. And I think I earned some brownie points with some of them because they realized, some of them, when they were talking to me, "Oh, hang on, this guy's from head office. He's going to tell the big boss." I didn't do that, but I made sure that they implemented it properly. Okay, so it's a good idea to meet with the leadership team to understand of the client what their vision is. And that might only be one, it might only be the client, he might be the only leader in the business, but hopefully there's a few other people. And you can gauge from them what they really want to achieve out of the business. I found at times they're a bit quiet to start with, but after a while they open up and it can be very interesting. It's a good idea then to make sure your team, if you're supplying services along the lines that we're talking about today, virtual CFO services, you will have a team involved. You need to have your team on the same page as you. You may have gone out and done the business of business review, and you may have this 1 inch wide, 1 mile deep understanding of the client. You need to then make sure it's documented and communicated to whoever in your team is going to be working with this client, because your firm's on display when you work with that client. So this is a preamble to undertaking a predictive accounting assignment. And today we have a guy who is, I think, a walking encyclopedia on all things to do with predictive accounting. Paul Barnaby is now going to give you an overview of the predictive accounting process. So welcome, Paul. We'll just switch the screens and you have the controls, sir.
Thank you, Peter. I'll just get my slideshow up and we'll go ahead. There we go.
Yes, it's on the screen now, Paul.
Yeah, I just need to get it going. Where's it gone? Here we go. Okay, thank you very much, Peter. I'm feeling humbled by your words of praise, and I hope I can keep up to them. And
I'm
Peter,
sure
I had a very similar experience back in my young days. I was the CFO and company secretary of the Revlon company in New Zealand. Revlon, as you well know, was a very, very large American-based cosmetics company. And the company I worked for in New Zealand was the licensee. Interesting stuff. And I made the same mistake of presuming that the users of the reports that I was generating would understand them. And the other mistake I made, Peter, and I think it's worth raising now, is when you come to take predictive accounting services to your clients, make sure they are involved at every step.
Yeah,
and that way they will own it. I made the mistake of not involving the marketing manager in his own budget. I prepared them, and he, pardon the expression, got the pricker because he wasn't involved, and therefore when the monthly comparisons came out, he was being held accountable for performance that he hadn't agreed to. And when I finally understood this, I went into his office one day, knocked on the door and said, "Can I come in and have a quiet chat?" He said, "Of course you can." I said, "Jack, I owe you an apology." He said, "What do you mean?" I said, "I'm doing the budgets, but I haven't involved you in your own budget, and I apologize." And, you know, after that, and it might have been like your foreman, Peter, we were the best of mates.
Yep.
And we got together on the budgets, and it was just a great experience, And I don't know whether I became a hero in his eyes, but I certainly was elevated a long way from where I was before. So my concept on taking these services to your clients is be that hero. Be that hero for your clients, that the person they cannot do without. And I can, and through my company or a joint venture, more correctly, with Peter and PlanGuru, which I'll explain later, you can become even a certified predictive accountant. But I think it's first good to look at what is predictive accounting, because we all know what historic accounting is all about, and there's internationally accepted report formats that we've all been involved with: the profit and loss, the balance sheet, to a lesser extent, the historic cash flows. But predictive accounting is just doing for the future accounting period what we've done in the past. So instead of populating it with transactions, we're populating it with predictions. And it's not just based on dollars, or shouldn't be. And I'll develop on that theme a little more as I go along. And why do we want to do this for our clients? Because we can help them make quicker strategy changes. And that will unlock greater profits, improve their cash flow, and achieve their goals. When back in my general practice, I did a survey across my small business clients and looked at their bottom line. And in about 70% of the cases, they were not achieving the amount of profit that they could to go and earn as a salary, doing the same thing externally. And that was a big eye opener for me. So was there a strategy there? Yes, let's get that profit up so that the shareholder, the one that's taking all the risk, is getting what they want. And how do we do it? Well, you'll hear me talk about key drivers. And this is very, very important. And Peter has been talking about the business on business survey. And Adam Hale is right. An inch wide and a mile deep. Too many of us looked at our clients a mile wide and an inch deep. And that just didn't cut it. So you've got to have a look at what drives revenue, what drives the balance sheet, what drives the capital requirement. And then, and only then, can you translate those to the predicted financial statement. So just a little bit about me. Peter's lavished the praise, I think, maybe a little bit too much, but we'll get through that. Yes, I am a chartered accountant. Yes, I have been in general practice. And one day in that general practice, I had what's called today a light bulb moment. And my usual methodology every day was to arrive at work, go and get a cup of coffee, get a blank piece of paper, sit down at my desk and write the goals for the day. It might be a to-do list, but what are the goals for the day? And I sat and looked at this piece of paper and it remained blank. And I suddenly realized that what I was doing was all wrong. I was totally kept busy with history stuff, tax returns, GST returns, all of it. And what I should have been doing was working with my client's future, not their past. And a lot of it was to do with the fact that I'd had GST tax returns up to about here. I'd had the whole historic accounting process, which had changed quite a lot up to about here. And I decided I'm going to do something different. So that was the way I sort of came into this. And I took that leap into virtual CFO services. I told my clients, I am changing. I am going to do this, this, and this instead of that, that, and that. And I visited, as Peter said, I visited each one to tell them that news on their own premises. And it was interesting, after I'd been working for some months and doing these financial forecasts and working with their strategic plan, I took a survey of 3 or 4 of my top clients and said, what do you think about the new range of services? And do you know, to every one of them, they turned and said to me, Paul, what took you so long? And I thought, hell, I have been doing it all wrong. I hadn't realised. And they were sitting there wanting these services that I wasn't providing them. Now, think about that. Have you got clients that are sitting there wanting your services more than what you're doing now, and you're just sitting there not doing it? So take that leap. Since then, and yes, I go back to the FMLC days as to helping me when I was doing that. So I've now had some 20 years of only predictive accounting, financial analysis, strategic planning, and of course, budgets and forecasts. But that's all I do and all I have done for the past 20 odd years. And I do that through my consulting practice called Beyond Accounting Technologies. But I'm also the regional integration consultant for Asia Pacific for PlanGuru. And I'm going to be showing you a little bit about PlanGuru as we go on. But I'll just maybe pause there a minute and say there are other tools out there other than PlanGuru that will do a similar job, but consistently I compare those tools to PlanGuru, and every time when I compare the features and benefits to the cost, PlanGuru wins. And PlanGuru know that, so I keep them on their toes, if you like. And there are other equivalents to me around the world. There's one in England, there's one in South Africa. And we have also jointly talked, and we know that we keep them on their toes. So I've worked with many hundreds of CFOs and accountants, and also many hundreds of public practitioners. So that's where I see my role, is wanting to help you look like that superstar, look like that you're a hero. So how do you take those CFO services to your clients? Well, Peter's given us a very good introduction to the approach you should take, and that business of the business, I think, is so important. But coming back to your own practice, taking CFO services, is that going to be a small step you're going to take, or is it going to be a giant leap? Well, I can tell you from experience that it's not a small step. It is a giant leap, and it is one that you will be grateful that you've taken once you've taken it, but you've got to take a deep breath, I can tell you. Because here I'm going to tell you, delegate all compliance and tax. I don't mean delegate it out of the practice, although if you want to, you can. But from the client's point of view, they will still think you're doing it, because they'll ring you and ask you these questions. But it doesn't mean you have to do that tax return. It doesn't mean you have to do that quarterly BAS, or it doesn't mean you have to dig into QuickBooks or whatever the client uses. You can delegate that and still appear to be in charge. But here's the important one. Tell your clients what services they're going to receive, and that includes the financial forecasting. Now, going back some years before we had the tools we have today, to get some of those services, and I'm particularly looking at the financial forecasting, it wasn't compulsory for clients to have that service, but certain of their contacts and business need providers forced them to have budgets and forecasts, and I'm particularly referring to the bank. And the problem that we had, and I'm not going to having to go back that long, maybe 10, 15 years. When the bank forced a client to have a budget and a three-way budget, what did you do? It was enormously time consuming, and it set up a thought process in the profession that budgets are expensive, and they were. And I can remember a relatively small SME that I worked with, that I was probably charging $2,000 or $3,000 a year for compliance work, doing the first budget that the bank forced on them, and a fee came up of $5,000. And I'm thinking to myself, can I charge that? Well, this is the sort of problem that there was there. Today, it does not exist. You have the absolute right to tell your clients what services they will receive. If they don't want them, maybe they're working with the wrong accountant. And that was the attitude I took with some of my clients 20 more years, 25 years ago. And yes, I lost some, but they were clients that I was probably going to lose anyway. So this is quite important. It sounds dramatic, but you've got to tell them you're going to have a budget, because this is going to help you in your business. And so you make those financial forecasts compulsory, not forced, but compulsory if they're going to continue to work with you. Now, not all of your clients will come into that SME range that you think will benefit from help, but don't make the mistake of making that judgment too soon. Talk to the client before you make that judgment, because they might be like my key clients, sitting there waiting for you to do that, thinking maybe that you haven't got the ability. And that's the other problem that's been in the profession. They think that accountants are only tax compliance people. They don't see them as virtual CFOs who are in the top tier of the company management. And here's, again, echoing what Peter said, take the time to learn what's going to make your client's business succeed. And then take that leap and just get on with it, guys. Just get on with it. It's fabulous fun, I can tell you. working with future plans is just great fun. So here's a few prerequisites that I can share with you. You've got to ask your client, what do they want to do? What do they want to attain? And my question was to them, tell me what you want to achieve and make it your wildest dreams. Don't qualify it or quantify it now. Tell me in your wildest dreams, what's your goal? And it really just opens up a completely new relationship between you and your client, because they're now looking at you and saying, what's this guy talking about? He's now talking about helping me achieve that $1 million profit, which I know is possible, but I just haven't known how to do it. And here it comes back to the tools. We are lucky today that we do have appropriate tools. Now, I support PlanGuru for the preparation of the three-way budgets and forecasts, but there are other tools out there that I would recommend to you. There are reporting tools. One I'm thinking of particularly is Cash Flow Story, which was developed by a colleague of both Peter and I's going back those 30 or 40 years. Cash Flow Story is a great tool to have to talk with your client and others on what are the desired results and what are the historic results. And here's the one when I was talking about my experience at Revlon. Involve your client with every step. It's most important that you do so, because what happens when you do that, they take ownership as well as you. If they haven't got ownership, they're going to lower their opinion of your preparation and detail that you've used. You may be estimating the ability of that company, the client's SME, to actually do that. But if you involve them with each step, they'll tell you. And you might find that it's a good idea to have some trained members of your team that can help you, because that is going to enable you to scale up and actually put more clients into this scenario. Doing it all on your own, you're limited to your 8 hours a day or 40 hours a week, if that's what you want to do. A lot of people are finding that not enough, and they have to work longer hours. So look at developing a scaled up scenario where you can have one or more team members helping you, as I did. And when it comes to data preparation, just automate it as much as you can. And that's one of the other reasons I like to be involved with PlanGuru. Their business model says we want our users to be hero CFOs, not data preparation people. So they want to, for example, make the simplest link between your accounting system or your client's accounting system more correctly and PlanGuru, so you can populate historic data for example. So prerequisites. Now let's have a look at the key content of what you're doing in this financial forecasting. It goes further than just the budgets and cash flows, because predictive accounting reports belong inside the overall business plan, which your client may or may not have. And I have seen scenarios in SMEs where we've gone in and had a look, and we've found that the business plan includes the budget, but it doesn't comply with the business plan. So again, it's so important that you are involved at every step, because they may have developed a business plan already and it may just need a revisit so that you can get in the predictive accounting reports, KPIs, dashboards. Here's another essential: monthly comparison or variance reports. Involve your client with that. Pull the data. It's so easy to do. It can take only minutes to access your client's data and produce a report which you can give them back. Just as soon as they say the month-end accounts are complete, you can give them a variance report. Now, how great is that? Again, going back some years, that would have taken us hours and hours. Not today, minutes. Monthly review meeting. Not all of your SME clients may want you to do that because you do involve cost here, but it is a great tool because you can share those variance reports. You can review what went right or wrong. And the important thing is that you can share with, or the client will share with you, updated strategies, and that will allow you to update a rolling forecast. But that's, again, I think, a prerequisite or a key content, that updated rolling forecast. The budget can be just put on the electronic shelf and left there, and that's the way it should be. But month by month, you should be updating what your expectation is going forward. And you may share those reports or even meet again with your client. Okay, I'll just quickly now, if we are taking questions today, Peter, I don't think we talked about that. If there are any questions, either bring them up now in the chat or email Peter or myself. My email, I think, is on a slide later, but it's Paul@beyondaccountingtechnologies.com and Peter@ESSBIZTOOLS.com.au. Okay, just a quick look. I'm getting a bit technical now, so I'll brush over this because I do want to show you PlanGuru itself. Going back a bit, traditional budgeting was always based on history. And we looked at the historic accounts, we adjusted for inflation, and we pushed that into next year. And we said, isn't that wonderful? That's the budget. Well, not so wonderful, because the history may have nothing to do with what's happening now. And COVID's a good example. How can you possibly use a historic budget when we were in the midst of COVID lockdowns? And then along came zero-based budgeting. It was all very popular. I think the US pushed it more than anywhere else in the world, but it's very complicated, very time-consuming. I never ever did one zero-based budget, I'm pleased to say, because I learned very early on in my study of predictive accounting that key drivers, which I mentioned earlier, are the way we need to do it. And going back again, when we didn't have the tools, this is where it was very, very costly, because to prepare a budget based on a line by line of sales quantities, prices, looking at how much inventory we would need, looking at what the receivables performance was, looking at payables, when we'd have to pay this, very, very costly to do unless you've got a purpose-built tool. So, I think that this again is very much in line with what Peter's comments were. I'm perhaps detailing it a little bit more. That's the one that I prefer, because that gives us the best outcome. So I think you'll probably not be surprised by what I'm going to say next. You need a budget. What do? You go and grab Excel or latterly Excel sheets, right? No, wrong. Excel is a fantastic tool, but it was never built for predictive accounting. It was built for chemists to use. It was built for engineers to use. Yes, it was built for accountants to use, but not for predictive accounting. And think about this, guys. If you're a client rings up and says, I think I'd like to change my accounting system, would you say, well, why don't you use Excel instead of Xero, Maya, QuickBooks? Of course you wouldn't do that. So my question is, if you wouldn't support it for historic accounting, why use it for predictive accounting? But here's the big rub, guys. Here's the big rub. There's a fella called Ray Panko. He's a spreadsheet nerd, but he's a great guy. I've never met him. He's at the University of Hawaii, and his published research shows, and I didn't believe this when I first saw it, 91% of published sheets, Excel sheets, have got errors in them. And I don't mean errors that were fixed. I mean errors that the author did not know about. And that's the worry. And I'll go further, guys. If you want to continue to use Excel in your accounting practice to prepare predictive accounts, fine, but ring your insurer and tell them there's a 91% chance you're going to have a claim. I shouldn't joke about about such serious matters. But guys, it is serious. And do yourselves a favour, don't use Excel. Okay, as I said before, there is a choice of applications, and it's up to you to choose which one suits you when you look at that comparison between technical and features and compare that to the cost. But I did a research not that long ago as to the tool out there that had the same benefits, technical abilities and features as PlanGuru, and it cost $30,000 US.
Mm.
And that's not once, that's every year. And I'm serious about that. So that's again why I'm a great lover of PlanGuru, because that's the sort of income statement that you can prepare. That's month by month, line by line, group by group, and year totals. There's a predicted balance sheet, and there's a cash flow report internationally, as I was saying before, accepted standard report format. So that's just a slide showing those. But what I want to show you, how are we going for time, Peter? Are we all right?
Yeah, another
5?
Yes, thanks.
Yep. Yeah, another 5 will be great. I just want to show you a couple of aspects of PlanGuru. There's a report that you can do off PlanGuru, and this is into the cloud. The PlanGuru version that I'm showing you today is the desktop. There is a cloud version on release in the US, and not here just yet, but coming soon. And so, but this report is cloud-based. So if your client wakes up at 3 a.m, worried about what their accounting stuff is doing and their reports, they can log in here securely and have a look at that. So reports like that are very much available. I just want to also show you, if I get out of that, and I just want to show you, I bagged Excel pretty strongly, but I'm now going to say it's a great reporting tool. And PlanGuru are close to Microsoft, and they actually have a link to Excel so that the PlanGuru data can be populated into a report that you format, because your client might like budget actual forecast variance reports. Very complicated for some, but others will want them. So here in one page, we've got last year, we've got the current month, we've got the actual budget and forecast with a year to date on the right hand side, and that's all done with a link, as you'll see. Whoops. You'll see here, this is the Excel menu. Down here are PlanGuru items, PlanGuru settings, PlanGuru put a data member in. So PlanGuru is great for that. And the other thing I just want to quickly leave you with is the drivers and how PlanGuru does that. So if we have a look at this non-financial data page here, we have budgeted our sales by quantity, including a if I have a look at the analysis setup, I'll just show you what I'm talking about. Have a look. Including seasonality. That's the word I was after. This company gets 40% of its sales in 3 months of the year. So PlanGuru was looking after that by looking at that seasonality table and using that to predict the units for the year totaling 2,200. And then that links over into the income statement. If I have a look here, and you can see there I've used those unit sales, and then I've applied a price of $450. Now, the point I'm making here, Peter, is we've used a very, very down-to-earth assessment of how many computer box only are they going to sell, at what price, and that's flown through to the income statement. But it's also updated if we change it. It's also updated the balance sheet, and it's also updated the cash flow.
Yes, right.
Because when I talk about drivers, let's have a look at accounts receivable. We're looking at an awful 70 days collection rate. Now, you can target 60 days and immediately have a look at the effect on the profit. No effect on the profit, of course, on the cash flow and the balance sheet immediately. do that in a spreadsheet and you'll be there for 2 hours. So that's, I think, the last thoughts I wanted to show Peter. Anybody who would like to have a more detailed run through of PlanGuru is very welcome to get in touch with me, and I'll do so. It does things like ratios and KPIs that Peter was talking about, and you can construct your own. It is fully compliant with GST and shows you the GST calculations. So it does all of that. So just back to my slides for a moment. We've had a look through that one. So I can help you become a certified predictive accountant. And we will help you do that by giving you advisor licenses for PlanGuru, unlimited licenses, but up to 10 clients within those. So you can empower all of your senior accounting staff or those that want to with a PlanGuru license, and within the firm you can use up to 10 clients. Normally that's only 3. ESS BIZTOOLS that provide all the tools and work papers package, and that is a very significant part of becoming the certified predictive accountant. I will do the one-on-one implementation through my company, Beyond Accounting Technologies, and there are 3 online collaborative training modules, and ongoing phone and online support is included. I'll cover the investment life unless you would like to do so, Peter.
No, you're all right. No.
Yeah, I'll do that quickly and then I'll shut up. There's an annual investment of 4,200 plus GST, or monthly 420 plus GST. And that includes, as I say, all the software, all the ESS BIZTOOLS packages, and sessions from them to your firm, and the one-on-one implementation from my good company itself. There's just one other thing that I'd like to comment, Peter. It is Black Friday, and I don't, like you, have a black shirt. I'm sorry, but my recognition of Black Friday is I will do a one-on-one meeting with anybody that would like to do so, and give you a report on your staff capability and training, the tools and software employed or you'd like to be employed, the marketing of these services, and this will enable you to very confidently make that leap and take your services to the client and make them feel that you're a hero. Back to Peter.
Very good, thanks, Paul. And we'll just bring it back and I'll move on. So thank you, Paul. That was a good overview. There are many other assignments that your client might require if you're offering this enhanced range of services, and I've listed a few of them here just to let you know that it's not, we don't envisage that performing this virtual CFO services is just the using the PlanGuru software. There's a lot more to it in doing this job, and these are some of the items that are included within the ESS BIZTOOLS material that you would have access. Utilizing the SME needs analysis to have regular reviews with your client on his or her goals. Paul referred to that before, but we've actually prepared a checklist of some of the issues. It's amazing what comes out when you prod the client a bit. You know, what is making them wake up at 3 a.m.? Are they happy with their succession plan that's going on in the business? What do they really want to do? Do they just want to go fishing? Sales analysis. We discussed this in the webinar 2 days ago that I had Trevor Marchant, a sales consultant, former sales training manager for Westpac. And Trevor made some interesting comment about how accountants need to sell this type of service. He says we're all salesmen, just like most of us don't know we are, and we need to adapt to that. But he made a very interesting comment about all of these services. He believes that sales are not bought by the
client. You have to sell the service as an accountant, and he has got material to assist in doing that. The sales process analysis that we have is a calculation of a reasonable charge out rate that will generate the profit that you're trying to achieve, or a professional charge out rate, or if you're in or your client's in retail, what's the mix of the various products? And they might have 30 or 40 or 50 different product ranges in their store. They've all got different levels of sales in quantity. Some are real stars, of course, and it'd be lovely to have a business with all them, but not everyone wants to buy that one product every day of the week, and you have to have other products with it. And the markups vary. And we've got a product which will assist you to do that analysis, because that's very important for your client. Weekly performance reports, I think, are very important. It's a process that I never learnt that existed, to be honest, until I went into a listed public company and found that they had 350, 400 activities besides 4 very big meatworks. And we were required to prepare weekly profitability reports on all of them. I said, what? But that was well planned. And then I found that was widespread in industry. Yet SMEs don't do it. They don't do it. The big end of town does. Woolworths do it in each of their supermarkets, Paul.
I'm not surprised.
I got to know a Woolworths general manager in a store very well, because both of my kids, when they were going to uni, worked in his store. He had 45 departments. And over a drink at a club one night, he told me that he knew by Monday, 3 o'clock, the results of each of those 45 trading activities up until that weekend, which I assume was the Sunday. I never actually asked him that. Maybe they finished on the Saturday, but I assumed the Sunday. And that was turnover, gross profit percentage, sales, average sales, labour to turnover, all of the material.
Wow.
Now compare that for a butcher shop or a delicatessen or a dry goods or whatever. Compare that to someone that might only been 50 metres outside in the shopping centre itself, who was running a butcher shop or a chicken shop or whatever on their own, not doing that. How they were running completely blind, yet inside the Woolworths people were sitting down within 24 hours of the week ending, analysing their performance. Now, IGA do the same thing. I'm told Coles do it, and a whole range of big businesses do it. Years ago, when I was in the public company, we had a deal with David Jones. We put butcher shops into David Jones' store, and they definitely were doing all this every week because it was all part of their process. So think about it. How do you introduce that for your clients? It's a great control mechanism, because the responsible manager's got a report to look at. It's there. He's got to read it. And so's his supervisor got it. And that was more important, I think. And what else have we got here? So debtors monitoring, debtors days outstanding. It's hopeless in Australia. We've got to get it down. And we need to be, I think, a bit like a dripping tap, at it all the time. Personal property securities register. I personally dislike that legislation, but whether I like it or dislike it doesn't really matter. It can wreck a client because of ignorance, mainly. So you need to be aware of it. You need to be using the material we've got in our system, which identifies particular client groups that are more vulnerable than others to having problems. And that's part of risk management reviews, of course, which you could look at and talk to your client about. Research and development. This is one of the programs, and someone said to me one day, oh, Peter, that's only the big end of town. And I just laughed. I said, no, actually, half the expenditure on research and development, or to be more exact, 49%, according to the Bureau of Statistics, of the expenditure on research and development for business is the SME market, and half of that is small business. So it's and the figures, I think, ended up at about $7 billion in the 2018-19, which is the last year available. It's an enormous investment. And you could have a client doing research and development that's basically a startup. they've got an idea, a burning ambition. They want to achieve something, and they got no money, or mightn't have much money, but there could be a multi-million-dollar business a few years down the track. Do you just want to ignore them, or could you help them and help them through the R&D claim process? Corporate governance, Paul, I think is very important for people to look at, because as companies grow, they're going to have the opportunity these days of being able to raise capital, which wasn't always there, of course. They can raise capital from the public, and with that comes a responsibility that they've got to perform, and they will probably find that there's people who are put onto their board by the new shareholders who have got a lot more business experience at board level than what they might have. So you don't want your client to be embarrassed. You want the client to be able to come across that they fully understand this process and not be at a disadvantage. No one likes being at a disadvantage in a board meeting. So one of the services that we've built into our package is a complete corporate governance. Now, they can go and do the Institute of Company Directors course if they want to, and I do recommend it, but a lot of your clients won't want to do it initially. So this is a introduction to it all, if you like. We'll give them enough to get them through. But if they really want to do it, they should go off and do the Australian Institute of Company Directors diploma course. Team training is very important to make sure that your team understands what the negotiations have been with the leadership team, but also your client's leadership team may need some training on things that I talked about earlier. Key performance indicators, how to read the budgets and cash flow reports. I think it's important that you sit down and discuss this with them, because they then have to implement all this. You're not going to be there running the workshops or running the farm or doing whatever's required. And communications with and negotiations with banks and lenders. If you were the full-time CFO, that would undoubtedly be your role. I think it's a role you can perform as the virtual CFO for your client, at least the initial discussions, and finding out what the bank really wants. And then your client, of course, at some stage has got to meet with their banker. There's many other things I've got there: monitoring the cash flow position, using these cash flow forecasts, not just for a paperweight, but to really look at them and say, what's it telling us? And it might be telling you that in 10 months' time, there's going to be a financial problem. Maybe it's because of supply chain difficulties. And someone in the budget process says, well, we need to buy all this stock earlier now because we can only get shipments out of some country in the world up to October. Then we can't get any more until April next year. And we're having to go through them because of supply chain difficulties. There's a war in Europe and things are changing. And suddenly someone says, well, that's going to give us a cash flow problem. We haven't got that much money in the bank. We're overdrawn. You've then got to, obviously you then react and say to the client, well, do you want to try to borrow money? And the second question I have straight after I ask someone that is, have you got the security? Because banks want security unless you can negotiate a very special deal. But these days we can also look at crowdsourced funding if the turnover is under $25 million. So there's opportunities to raise up to $5 million. And there's a whole process, and we've covered all that in the material. And we have a special webinar on the raising of using crowdsourced funding to raise capital next Thursday, Paul. So people might be interested in going to that. What else do we have? Obviously, developing the strategic and long-term financial plan. And don't forget the exit strategies. And this is where you need to know your clients. Some clients have got an exit strategy of, a year's time. I had another client that said someone walks through the door, and if he got the money, he can have it. And he kept his business right up to date. Because I said to him, well, if you're going to have that attitude, you better make sure everything is up to date. So that if a client a prospect does walk through your door, if they're that keen, they want fairly quick negotiations. So you've got to have your figures available. And he actually pulled it off
one day. He had someone walked in and said, I want the business. He said, okay, here's all the figures. And he had it all worked out up until about 3 weeks earlier. So that was great. Not many people can do that. So what's the exit strategies? Okay, let's look at the challenges for accountants. I think it's decision time for accounting firms, honestly, Paul. You and I have been talking about these emerging issues for years, but they're now all coming in together, aren't they? Plus, we have the tax commissioner issuing the warnings about 2.5, 3 months ago. And Amanda Gascoigne, who was our keynote commentator yesterday from Amanda Gascoigne Consulting, said to me, Peter, I was actually in the auditorium when the commissioner made these comments that basically said there are significant changes and you need to do something about it, especially if you are involved in micro businesses and wage earner tax returns. That market is going to change. Tax return processes are definitely changed. So the challenge is it's taking less time to do tax returns. This is what's happened in America. We're probably 18 months to 2 years behind where they're at. How's it going to affect your firm? Important question to think about. Please think about it. And I think you could offer a diversification, and the virtual chief financial officer service that we're talking about, I think should be a targeted diversification challenge for your firm. Go ahead and look at it. So now we're going to give you a special offer. It's Black Friday. That's why I've got the black shirt on, because I'm trying to now put a salesman's hat on. The financial forecasting package, which ESS BIZTOOls has, will allow you to do everything that Paul and I have talked to you today about, and all the ancillary services that I've just quickly summarized. Normally, we sell that package at $9,900, including GST. We've got a special 20% discount. So the price is $7,920, but there's more. We'll give you access to that for 15 months as part of our access. So as part of our offer. Plus, we have some accommodation vouchers, holiday accommodation vouchers that we secured. We'll give you 4 of those. Now, that's for 3 nights. So one person can go away for 12 nights anywhere in Australia or Asia. You've got to get yourself there, of course. And but you could have 4 of your team have the holiday packages. Some people have said to me, no, we're going to use them in our social club. We're having a Christmas raffle and we'll put them on as the prize. Others said, they're going to donate them to their favourite charity, their charity of the year for their firm. It's up to you. We're not particularly worried. We'll just send you the voucher and you then implement it. So for $7,920 cash up front, you will get 15 months access and you can have a short holiday if you like. Now, that package includes, Paul's already mentioned this, but I'll just repeat it. You get the PlanGuru software so you can access for 10 clients instead of the 3 clients, which is normal. PlanGuru charge about $29 US per month per client to go over the 3. So on my reckoning, if you go to the full 10 clients, it's a saving of over 3,400 Australian dollars per annum. So it's a good deal. Plus you get trained by the predictive expert himself in Paul Barnaby. We'll take you through and make sure that your team is very skillful in delivering. And also you've heard Paul talk about the package of training for the accreditation process. Help me out, Paul. What do we call that? The
certified predictive accounting.
Sorry, I didn't have it on my notes, so I forgot. Certified predictive accounting, which is very important. We have some other package specials. The advanced package, which includes all of the ESS material, but doesn't include the PlanGuru side of it, is a net cost of $5,200 with the special for 15 months, and you get 4 of those holiday vouchers. And if you are just looking at starting all this, you've got a very small firm, your investment will be, instead of the normal $2,100, $1,680 for 15 months access. You get 2 of those vouchers. You don't get the PlanGuru software, but you can
negotiate separately to subscribe to PlanGuru if you wish, just not part of this package. But you've got most of the other material that will get you started on being able to offer these services. All you need to do is to go onto our website, and there's the website, www.essbiztools.com.au, where you can register to subscribe. Or if you want, you can make a phone call to us, 1-800-232-088, and I'll be very happy to have a complimentary Zoom meeting. Now, my team's put 15 minutes there. If it takes 30, that's all right. We'll go through it. We'll look at who your clients are, where your firm's established, who your accounting team are, and what are you wanting to achieve out of your accounting firm? And I'll give you my recommendations of the package that I think will help you get started on this diversification of your accounting services. You can also go to our government grant website, which is part of the package, the subscription to it. You can go there. Grants are very important in Australia. They don't have many grants in New Zealand, do they, Paul? But
No.
they're part of the psychic in Australia of business people. So you can go to essbizgrants.com.au. You can trial one client for 2 weeks and see how it goes. I think you'll be amazed at the number of grants they might be eligible to apply for. And there's a lot of work for accountants in supporting clients who've been able to achieve grants. I think about 40% of grant income can be spent with an accounting firm. And the clients love it because 50% is being paid by the federal or state or territory government. And our grant program covers all three of those. There's Paul's contact details. If you want to talk to Paul about PlanGuru, 0411 214 471, or beyond his website, beyondaccountingtechnologies.com, or to send an email, paul@beyondaccountingtechnologies.com. And I think we've already told you the contact details of ESS BIZTOOLS. We don't have to go through that again. So we've got upcoming webinars in this series. Next Tuesday, we've got charge out rates for tradies, which is very important. One of our clients got 120 clients, tradie clients, on using this system. He's charging them between $7,000 and $10,000 a year over and above what they were paying for their tax return. So it's become a big income item for his firm. That webinar is on at 1 o'clock AEST, 2 p.m. AEDT. On next Wednesday, one of the most important webinars in this series, I have Andrew Geddes with me. We're looking at virtual CFO role, helping SMEs to succeed. That's at 11:30 a.m. AEST, 12:30 p.m. AEDT. And we finished this whole program built around Black Friday, but also built around this evolution of these services over the 40-year period, assisting clients to get ready to raise capital. We're featuring that on crowdsource funding, equity raising, but I'm going to dive in a little bit into early stage innovation company. That's on Thursday, the 1st of December at 11:30 a.m. AEST. And you can register for any of those webinars at www.essbiztools.com.au. Paul, thank you very much for being with us today. Very interesting, and I hope that the people who are watching this on live feed on social media, my apologies, I forgot to acknowledge you people at the very beginning because the screen doesn't tell me that you're there. We have that record on another screen outside, but thank you for being with us. Those of you who are going to be watching this webinar at a time more suitable for you. Some people tell me they watch them at 3 a.m. I don't know whether I'd be watching you and I at 3 a.m., but good. If that suits their lifestyle, that's great. But if you've got any questions out of having watched this webinar presentation, please send me an email, peter@essbiztools.com.au, or send an email to paul@beyondaccountingtechnologies.com, and we will get back to you and give you an answer, and hopefully you will then have a conversation with us. So Paul, thank you very much. Have a good weekend. And,
a great pleasure, Peter.
And for everyone that's interested in the real World Cup, the FIFA World Cup, you better get on Australia tomorrow night. They need all of our help in their game against Tunisia after they got a football lesson by France the other night. Okay, so thanks, Paul, and we'll talk to everyone later on. Bye-bye.
Cheers.
Thanks, Paul.
No problem, Peter. Must run.
Yeah, thank you. Bye-bye.
Cheers.
And we'll talk to everyone later. Thank you.